Um, I guess we'll just start off at the very beginning. Of kind of a little bit of this is going to be redundant, and I'm sorry if it is, but I mean it's getting recorded, so therefore, I kind of got to go over, maybe some of the stuff that we've already went over, but um, nonetheless, it all makes sense here toward the end. Um, so I guess what I'm gonna do is I'm gonna start off with with really where where I start my day and how I'm going to determine where I should be trading and where I shouldn't be trading. Um, so I can't really know where I'm going unless where I started from in terms of the day goes. So so for instance, what we're looking at right now is let's see, let's get us scrolled over here to the overnight. So Friday's beginning part of the session, which is right here. Um, so let's get scrolled over here. All right, so basically what I'm looking for is how do I plot my lines that you see right here. This purple line, it's super easy. It's just settlement. That's all it is. Let me get rid of that. It's just settlement. You can find that on the CME. It'll give you your settlements for both NQ, and it'll give you settlements for the ES as well. But what you do is you plot your settlement, right? Because that is a pretty important level. Price does react at that level often enough. Um, but what I'm going to do is I'm going to set myself up with levels throughout the day. And the way I do that is if you've followed price enough in these markets, you're going to know how much markets move. Before they find an area in which they turn around at. You know what I mean? Or maybe they stop, or it has a suggested move for each day. And lots of times it's almost like a measured move throughout the whole day. And a lot of it's based around open interest. And this open interest is what really determines where price will go, and it'll kind of just stall out, and then it tries to return back, and then eventually, it'll make it support or make it resistance, either or. But how I determined that was from an overnight high and an overnight low, right? And that gives me my levels throughout the day, especially these red levels. Okay. And these red levels, there again, this is something that I usually keep to myself. But if you study these markets enough, you're going to figure it out yourself either way. But um, I'll go ahead and give it to you because I don't mind that for the fact of it's going to help you more than it's ever going to hurt you. But you got to know that these numbers that I'm about to give you out to you are moving targets. They're not stationary. That you can't become complacent with them because as this number grows with the NQ, those numbers grow, right? Because it's based off a percentage. But as it stands right now, with the way that the open interest market or the options market's working, the open interest suggests that these two levels should be this far apart, right? So this is what I do every day. I'll find the beginning of the overnight session because that's going to tell me what I should be doing. Right? I need to find the low for the overnight and the high for the overnight. Um, and typically it ranges anywhere from market open to about 6 o'clock in the morning. Right? That's the time frame that I'm looking for a high and I'm looking for a low. So if I scroll back through here, I'm trying to find the low, which at eight, at market open, at Globex open, excuse me, better said, is the low. And that low is 13,486.25. Okay. So what I'll do with that number right there um, is you'll add 110 points to that. Okay. That's going to give you your red level, right? You find the high. Okay. That high, it looks to be right here. Okay, so that high was 13,547.25. All right. Now you subtract 110 points from that number. That sets this bottom level. Okay. So we know what settlement is. We know what the suggested move to the downside is. We know what the suggested move to the upside is. Okay. These levels, these two red levels, that is to me a range. Okay. Throughout the day, everything that happens inside these two levels, I treat as a range. Okay. I expect for price to touch one side of it, and I expect for price to touch the other side of it sometimes throughout the day. And you can absolutely take this number, right, and this number and find out what the median is, and it's going to line up somewhere where all this chop was. You know what I mean? Typically. So that is the true mean. But realistically, I treat this whole range as the mean for the way that I personally trade. And sometimes these levels will be really close, and then sometimes they'll be really far apart. It just depends on what happens here and how it lines up with the overnight. How it lines up with the open interest. Um, so those are how those levels get set, right? So in a nutshell, here's what I'm looking for. If if you can follow me here, say for instance, um, so inside this range, for me personally, I'm going to trade my minimum size. You know, typically it'll be 3 contracts. For me personally, I don't know your risk, and I don't know, that's all based upon y'all, but I'm going to use the smallest amount of risk because this is the range for me. It could go up, it could go down. You know what I'm saying? There's no real conviction inside these two red levels for me to get really excited about. Um, Granted, hindsight, right? We had a heck of a move down, but that didn't mean squat to me until we got outside of this red level. Now, when we got outside of this red level, hey, I'm gonna load the boat. You know what I mean? Because to me, that indicates we've started a new trend, right? So I want to trade really heavy away from the mean, right? And if we start to go back in toward it, I'm lightening up, right? Because I'm more likely to get filled out on any target I have if we get outside of this red level, right? On the bottom side or the upside. And quite frankly, you'll have better luck on the upside because you've got, not only people being wrong that were short that are having to buy back, but you've got new buyers, right? That are all pushing this thing up, 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 and up and up. So you're going to have better luck trading this thing up than you are down any given time. Um, it just makes the process a little bit easier in terms of your targets getting filled. Um, and another thing is right here when you get down here below this thing, lots of times you're going to see price come down and pull back into it, and then you're going to have an opportunity, right? Maybe not so much as it's it's not this line itself that matters the absolute most. Everything's got to be added together. You've got to have a lot of confluence here for you to really want to take a trade off of that exact level, right? So 437.25, yeah, that's a level, but more so, this is just kind of an average, right? This just tells you where the mean is, and are we going away from it, or are we going back into it? And for whatever reason, I missed that rascal right there. I think I was trying to load up right here Friday, and I didn't get loaded in because it didn't pull back into me far enough because I was trying to get it, somewhere toward the cloud. But it didn't. But anywho, it's all good. But it did work out later on out into the day where you could have loaded in pretty heavy and had that short, to the Bollinger Band for sure. But anyhow, that's the deal, right? Throughout the day, if you're seeing these levels or you plot these levels yourself, you take your overnight low, you take your overnight high, you run your 110 up, run your 110 down. Okay, and that gives you these two levels. You've got your mean. You want to trade ideally outside of the mean, headed away from it. Okay, and want to lighten yourself up and be very, very, very cautious and keep your stop super, super, super tight and be willing to take a break even quickly on the way back into this thing because you know your best trades are in the new trend, right? And if we're headed back to the mean, we're not in a new trend. You know what I mean? You're likely to get chopped. Um, so as long as you're trading away from the mean, you're doing pretty good. You're just at least giving yourself the best opportunity to make money, right, or to hit your targets. Um, so that's the overall price discovery for me, right? Um, disregard this yellow level right this second, but anywho, that's that's the deal with these red lines. This purple one, anybody and everybody can see it. It's simply just a settlement. And price does react off of it, so just be mindful of it if you're taking a trade close to it. And maybe your target was down below it. Maybe you shouldn't have took that trade. You know what I'm saying? You wanna let it back. You wanna let price back up into it and then take a trade down, right? Um, here's probably a pretty good example. Um, you know, uh, I guess you could have. I don't know though. I wouldn't have longed off that. Um, you probably could have took a short down into it, but I mean, you see all this chop right here. But if you let price get down below it and back up into it, you've got a little bit of confluence right there. You've got the cloud, and you got settlement sitting right here. And you could have took a short right there, and let it just don't come on down here. You know what I mean? And took your profit. That would have been a pretty sweet little trade there. So use these levels and add it in with some confluence, right? Whether it be via the cloud, um, you know, and just trade it back down into some other level or the Bollinger Band. That's kind of the way that deal works. So yeah, that's ultimately the way it is as far as price discovery goes. Um, that's the way I use these levels, and that's what I do every day. So, but don't get hung up on this 110 number, because that 110 number will change as the overall price of this NQ increases. Um, so just a heads up on that deal. All right. So I guess let me get back over here. So we'll have several renditions of this MagnaCloud here. We've back tested this thing and had a lot of people looking at this thing, and a lot of people that had fresh eyes, and a lot of people that had a lot of experience looking at this thing and really back testing it and trying to get some better data. So there's a few things that have changed, and some of those things that have changed are simply like the cloud itself, right? This cloud is based off of an 18 and 38 exponential moving average. That's what produces the cloud. The Bollinger Bands, they have stayed the same. And the 310 oscillator, it also has stayed the same. There's nothing changed with it. I'm going to flip y'all back over here to my trade of 8. Well, I tell you what, before I do that, I'm going to explain something to you real quick about this cloud. So this cloud, it also allows for dynamic levels to be set throughout the day. And what happens is when this cloud will go from green to red, it'll leave a spot, right? And this spot, let me take away price so you can see this thing a little better. If you can see right here, I'll go ahead and get this thing opened up so you can see it more. Where this cloud changes, where these things cross, that's where my level will come in, okay? And what that means is price, it didn't mess around right here. It left this area in a hurry. And what that does is tell me that there was either a buyer or there was a seller had walked away from that in a fast hurry. So there's some unfinished business there. Well, that's why that level comes to be. And most of the time, for instance, if that level was put into place by this cloud, it lines up very well with my volume profile stuff that where I could set levels in. Well, if you've broken that, if you've made this level to the downside, well, you're going to look for an opportunity to get short off this level back down into it, right? That's the idea. And as if I bring price back through, you'll see, right? You see that huge candle that just plowed through that. Yeah, that's what made that level to be. There is some major unfinished business right here. And what I would personally probably do with this level is, like I said, I would have, it didn't come up here and test it, but it's deemed as untested. Okay, so if price was to come down here, maybe it would have bounced off this settlement or something and come up here and test it. I would have took a short right here with the anticipation of taking that thing back down to wherever that lower Bollinger Band is. You know, so I know we're all hypothetically speaking. I'm hypothetically speaking right here, but somehow for whatever could happen for this price to get back up here and wherever that lower Bollinger Band worked itself out, I would be willing to take a short off that level and sell it wherever that bottom Bollinger Band is at that time. Okay, that's the idea. Um, Now, if there is a level that lines up before you get to that Bollinger Band, that lower Bollinger Band, I would be willing to take a profit at that level rather than the Bollinger Band, whichever come first. Is the way that both these levels come to be, and the way that I play these. Um, Good in and out, quick trades, very little risk. Because here's the deal, right? You take a trade right here, you can very easily put a 3, 4, 5 point stop, and just as soon as you get in this thing, you know what I mean? It's going to either blow you out or it's going to reverse quickly and go back the other way. It, there's no there's no fiddling around right here, man. It just rips. It either take you out, or it's either going to rip into your favor and you'll be able to take a profit quick. There's just no ifs, ands, or buts about it. It happens so fast. Um, and once these levels are tagged, right, you need to delete them. They no longer hold any purpose whatsoever. So if price come up here and just blow through this thing and took you out of a long, or took you out of a possible short, delete it. It's done. There's no need of messing with it. Um, you just don't delete these red lines, the purple lines, throughout the day. And these yellow lines now, for instance, say this NQ, through the overnight decided to start to increase, right? So, and maybe you run up here and touch this yellow level. Well, when it does, it's going to have a red to green move through the cloud, right? And so what you're going to do is you're going to take this thing and you're going to find where it crossed, just like it did up here, and you're going to set you another level in. And it's going to be yellow as well. And same thing, right? It busted. It would most likely bust through it through the upside. Well, you would look for a price to come down, go up and then come back down and tag it so you could take a long up to the upper Bollinger Band. That's the way you're going to play this cloud. It's dynamic in both that it gives you trade location and it also gives you levels to set. You know, um, and last week I took some super sporty trades off this thing. Like for instance, right here. Here's a pretty good example. I think I actually took this trade, to be quite honest. Yeah. So if you see right here how it went from red to green, I set my level right here, and you see where price come, right? It went right down to it and just took right off, right up to the upper Bollinger Band. So that would have been a great trade. Very little risk. What is that? 17. That's two. That ain't even 2 points. Yeah, 2 points. So 2 points of drawdown you would have had right there. And I mean, basically, you was immediately in the money. You could have pulled your stop right there, and you'd been pulling it to break even very quickly, and just let that thing run, and you would have hit you upper Bollinger Band right there. I think that was the trade that I actually took. I do believe. And there again, right? So it come down and tagged it. I deleted that line, and that was it. And I will say real quick, this is on the 5-minute chart. Okay, so do not input levels on anything but a 5-minute chart. That's the only time frame that you need to start setting levels. I'm executing off of a 1 minute, and all of these levels are being set on a 5-minute. That's the only thing the 5 minutes being used for, is to set these levels. they have a little bit more meaning to them on a 5 minute chart. Um, let's see here. And I'm going to go back to, I think I'm going to swap over to my trade rate real quick. Change those. All right. All right. Can y'all see this trade rate?
Yep.
Okay, good deal. Good deal. All right. So as you can see, there's a little bit changed in terms of what you're looking at. Um, Realistically, the only thing that I have done is MagnaCloud is a little bit different. Um, I just disabled the fast line, slow line. I didn't like them being there. I wanted just to see the cloud. Um, and the length, it's already the same. Um, Bollinger Bands are everything's the same. 2.21. The length 15. And this isn't the 310 oscillator, but however, it's put in as a 310 oscillator, right? So I'm using the simple moving average. It The good thing about this, it allows me to delete the histogram, and it allows me to put these inputs in to serve the same purpose. So I don't like the fast line. I just like the slow line, just to keep it simple for me. And then this here is just the Tiki cumulative delta line, and it's got a zero line, and then it's got what is deemed as cumulative delta. Um, what I like to do is use this for confirmation, right? We're on a 1 minute chart. What we're looking at. So as you can see, from 10:16 Friday morning, this Tiki cumulative delta line was just telling us, hey, short is your best direction, which we all knew that, at hindsight, right? We all knew it was correct. Well, that right there just kind of helps me to look at it and gauge, right? Just looking at a gauge, it tells me what direction is more supportive to trade in, right? And if it was above it, I would be looking for longs. If it was below it, I'm looking for shorts. It's that simple. Um, and that's all it is. And then in this slow line up here, what it does is it helps me determine where I can possibly get short. Okay, and I'm gonna go over the fib as the last one, but I'm gonna go ahead and go over this momentum cloud in the Bollinger Band rejection real quick. Um, so what I'm looking for, right, is this cumulative delta line to be below zero. I'm looking for this thing to go down below zero, right? Which there was really nothing to do here anyhow. I think we had news. Yeah, we had news around 10 o'clock Friday morning. That's probably what the deal was there. But anyhow, I'm okay with as long as we're below the zero line here, we're below the zero line there. I'm okay taking a short into the cloud or off the upper Bollinger Band, right? And you see this poke right here. Let me get this thing scrolled in where y'all can see me. Okay. So we're looking for shorts, right? We're below. All right. We poke through that upper Bollinger Band. The cloud is red. Everything is telling us short's the way to go, right? Okay, so we could have took a short right here at this Bollinger Band. As soon as the price poked through it, right? And all we do is simply take that trade at the Bollinger Band and sell it as soon as the Bollinger Band is hit again. Okay? So that is, what am I on here? I'm on the ES right now. Same deal. It's all relative. Um, so yeah, you take short right here, 41.75, and you sell it right here at 41.69. You know, 1, 2, 3, 4, 5. 5 minutes later, that's a 5 minute trade. These don't happen all the time, okay? But the setup's got to be right. It needs to be below, and let it puncture the upper Bollinger Band, sell it down to the lower Bollinger Band. The cloud needs to be red. Okay? Uh, and then you can turn around. Now we're looking for a red to green move. We didn't touch the upper Bollinger Band. We didn't poke it. We come close right there, though. We didn't actually do it. But you wouldn't have had anything to do right there anyhow, right? Because this thing was above zero. So nothing to do. Nothing to do. Here's another good example. We had a cross below. This is already telling us to be short. We already know this. Now we're looking for a cross below the zero line. And it did. It crossed below it. And then we retrace back into the cloud. Okay? And you can sell it off into the lower Bollinger Band. Okay? Got short here, into the cloud, which you probably would have got stopped out right here, because if it was me, right, I would place an order right, right there. And as soon as we got down here to where I was in the money, what I thought would be pretty good, I'd go ahead and move my stop to break even. So you might have got stopped out on that trade. But you could have got right back into it right there when it moved back into the cloud, took a short right there, and sold it right down here as soon as it punctured that lower Bollinger Band. So we're still looking for shorts. We come above and we come back below. So now we're looking for a pull back into the cloud. And that constitutes a pull back into the cloud right here. You could have got short right into the cloud, but you stopped right above the cloud, obviously. Got short into the cloud and just sold it down to the lower Bollinger Band. You could have got a quick trade right there. Next deal, we're still below. We moved up into the cloud. Just simply take it off the cloud. Sell it down into the Bollinger Band. This is all momentum stuff now, okay? So you've got to be mindful, right? As long as we're trading and we're not going into levels, you can take these trades. Okay? As long as these two are pegged in the same direction. Cloud red, we're below the zero, you can feel confident taking a short off the cloud to the lower Bollinger Band. Don't get cute and try to run this thing out now. Just be happy with this trade, right? From the cloud to the Bollinger Band. No need to get crazy with it. That's how we get greedy, and that's how we get just kind of, in a little bit of trouble. That's all. So just be mindful of that. All right, so we're coming back up into here. We rise above, obviously, right here. You can't feel confident about taking that trade because we're crossing that zero line, right? Well, there's nothing to do right here. You would know that by looking at this. These two are not in confluence. We broke through. We didn't really pull back into the cloud, so there's really nothing to do right there. You might have got yourself in a little trouble right here. I could see where I would have got in trouble. It pulled back into the cloud. You would have took a short because both are pegged. Well, it didn't work out for you. You would have took a little loss right there. And it happens. But there again, if we look at this thing and we look at the levels, most likely this thing kind of lined up with some levels that told you, hey, you probably shouldn't have took a short right there. You know what I mean? Very well possible. I know right here we busted above. Nothing to do. And guys, got to remember these are three strategies rolled into one. I'm just wherever you can't get in a fib trade at, you can look for this Bollinger Band, poke. As long as these two are pegged, let it poke above and come back down, or trade it into the cloud and come back down. But these things have got to be pegged for that to happen because they're momentum trades. And this is nothing. This is not momentum. There's nothing about this momentum. This is a sideways market. Let's see here. Keep rolling. Nothing there. Nothing there. Nothing, nothing, nothing. I mean, you had an opportunity right here, but I just you can trade it in the cloud. But when you see the cloud not red, and you see an opportunity to take, I can't. I want all three to be lined up. I want a red cloud. I want this to be below zero, and I want this to be below zero to feel confident in taking a short into the cloud down to the lower Bollinger Band. I mean, could have got away with it right here, but it probably wasn't the best. Probably wasn't the best idea. You're probably gonna get whacked more than you're gonna get any kind of profit out of it. So that's kind of the Bollinger Band thing. We'll scroll over here to the NQ real quick, and I'll show you the NQ's day. Oh, dadgum! I just moved that. Oh well. Let me just remove it. Let's walk through the day real quick on the NQ. That's that level that I had put for the NQ, the new one that's coming up. All right, so so around 10 o'clock, 10:10, we broke that zero line on the cumulative delta, which told us, hey, we need to be looking for shorts. Um, and and let's just work strictly off the Bollinger Band poke, and let's just see how it works out throughout the day. You didn't get anything right there. They were both pegged, but you didn't get anything. Um, this you would have got stopped out right here. You could have got short right there because they were both pegged, but you would have got stopped out. For I don't know. You would have had you stop a little further than that, I would think, because that's 472, 476. No, you would have got stopped out. That would have been a 3 to 5 point stop. I mean, there's no need. If you poke through that Bollinger Band, there's no need to have you stop up here way above it, right? I mean, just put it right above it, because you're either gonna be right or you're gonna be wrong. So there's no need to dragging that rascal out. Just because it's gonna hit and it's typically gonna roll over and go straight to the bottom Bollinger Band. Um, so there's no need in moving your stop up, but you would have got stopped out right there. Let's just keep it rolling. All right, you could next Bollinger Band poke would be right here. I'm gonna go ahead and move these lines. All right, it barely got it, but it's pegged. Cloud's red. You could have got short right here off this one, and you could have sold it down here, which that wouldn't have been a ton. 451 to 431. That'd been 20 points. That's pretty good. That ain't that bad. Um, Here's where we start running into some chop. You could have got short right here, but you would have got stopped out on this next candle, right? You would have got short here. Your stop would have been there. You'd been in profit, so you'd moved your break even down here to it, and you just would have got stopped out on the next candle. That's all. But as you see, they were both not pegged at that point. We crossed through 0, 2, 2. Right here. Both were pegged. Or no, this was not pegged. This one was, the cloud was red, but this was not pegged, so you shouldn't have took that trade. Even though it would have worked out, but you should not have took that trade. Right here. And here again, we're running into the levels because it was 437. Yeah, we're running into the levels right here because I remember on the trade of 8, the trading view, 437 was our level. So you would not have been trying to trade right here, actually. You would have been out of this. You wouldn't have been in it because it was in the levels. Too close to the levels to do anything. But I'm just trying to show you the gist of it, right? Of this Bollinger Band poke, right? It's just a little strategy that allows you to get a little extra more out of this whole MagnaCloud deal. Because it needs to be pegged with this indicator, and the cloud red, and for the poke to happen, you know, um, it's just kind of a bad example because they weren't much examples Friday, but you would have got short right here because it was below zero. Cloud was red. You would have got short here. You would have most likely got stopped out, break even. You would have got short, moved your stop down. Been in the money a little bit and immediately got broke even. Even though it's a target, there's no need to have any stop above it, only to enter. And then as soon as you get in money, put that rascal down here to break even, so you ain't risking, anything. Um, and there again, we're just in these levels. Oh, yeah, we're just in them. That's all. So I mean, you've got two things you can work with. You know, as long as these two are pegged and we bust that upper Bollinger Band, you should be able to take. This peg, and the cloud red. You should be able to take a short off that upper Bollinger Band poke and trade it back down to the lower Bollinger Band. And then also, in these types of situations where the line was at 37, yeah, that red line was at 37, right? We broke zero. We broke zero. When we come down, we pull back into the cloud. You can take a short at the cloud and sail back down into the lower Bollinger Band. Those are just simple momentum deals, right? It's where everything needs to be pegged to the downside. That's all that is. There's nothing super fancy about it. It's just short, quick trades where you're chasing momentum. That's all. Um, let's see here. Let's get swapped back over to the. Let's get swapped back over to my trading view. And most everything I do is on trading view in terms of charting goes. It's just easier for me to work with. I don't have the cumulative delta on trading view, but throughout the day I'm executing on Tradeovate. But I've done all my charting right here, so I know where these levels are ahead of time because I'm watching trading view all day long. But I'm just simply just moving right over to Tradeovate to execute. And that's when I obviously look at the cumulative delta line. Um, let's see here. So we've been running into some issues of on this fib stuff. And let me get scrolled into a 1 minute chart so we can see what's going on. And this is Friday. We'll just go ahead and mark up the whole day Friday if y'all want to. We know we had news at 9:45 and 10 o'clock. We just don't need to be doing anything during news. It don't matter if you see the perfect setup, like right here. That's a good setup. But you had news, so there's no need in trying to trade news because news will out trump. I mean, it voids all setups if you've got news. So don't trade news and just look at your calendar every day and just stay out of the market during news. But we can trade ahead of news and we can trade after. But that's that needs to be the gist of it. Um, and typically there's some pretty good trades ahead of market open. So as you can see, we look like it was a couple of good trades actually. You could have had a long and a short right here. This one wouldn't have been a very big one, but it would have been one nonetheless. Let's park her up here. Uh, Drawing pound. Oh, daggone. What have I done? Okay. So we got our crossover right here, right? And it's a 3-bar rule. You got one to the left and one to the right. One of either the one that crosses absolutely has to be the lowest level. So the one to the left and one to the right, or the one that it actually crosses on, has to be the lowest level. Okay, and I scroll up to the left. Once this is determined, the proper low is put in. I look to the left. All right, I find the last pivot high. Okay, the pivot high was this right here. I run my fib down and just stretch it out to that low. Okay, and then I grab my fib extension and pull it to that same low. All right, so get this thing scrolled pretty good where everybody can see. All right, so we made our low. All right, so looking to take a trade off the 382, the 5, and the 618 if possible. Well, was able to get loaded on the 382 and the 0.5, right? Let me get a trend line so I can show you where I would have got loaded at. I would have got loaded right here, right? And I'm selling it right down to the Bollinger Band, lower Bollinger Band. Okay. And I would have got loaded on the 0.5 right here, and I was sold it as soon as I got down here at 0.5, right? So two targets were able to get filled right there pretty quick. All right, so if I'm short here at 0.382 and I'm short at 0.5, all right, as soon as this price rolls down here, because my stops are up here for right now, right? Because I'm trying to load in all the way up for this move into these targets, right? Because the cloud is red, the indicator's showing me that we should be short, right? So I'm looking to go short, short, short. So I'm looking to add into all these levels up through here for my short, okay? But as soon as price starts to roll down through here, with my stop being up here initially, as soon as we break that zero line right here, right, I'm moving my stops. So if I got loaded at 0.5, I'm moving my 0.5 stop down to the 0.382. Okay. And if my 0.382 got got broken on the downside, going to target, I'm taking my 0.382 and I am moving it down here to my zero line, to where they initially started. Right? So the worst that I'm able to, so the absolute worst is I have a little bitty take profit on my 0.5, and I have a little bit of profit on my 0.38. Right? I'm just putting myself in a position to where I can have 4 or 5 of these trades that might come up here and just wick me, and that's okay. I'm not really looking to be a winner every single time one of these setups come, but what I am looking to do is not lose money if at all possible. So I will take a small win here, a small win here, right? And say I do that for 8 times. Out of 8 of those times, I'm not going to have to worry about it coming up here and whacking my stop, because it hits target immediately, right? And which indicate a very good trade. So if it's okay if you have 3 or 4 break evens, as long as you have those 2 or 3 good winners. You know what I mean? Because those 2 or 3 good winners is gonna offer several $1,000s. And if you can't be happy with a couple grand, you ain't gonna be happy with a bunch of them. It's just kind of the way that it is. But I would much rather reduce my risk as quickly as I possibly could and take a couple small break evens before this thing worked out perfectly. You know what I mean? And then just be there for when it does work out perfectly, like it did right here. You could have moved your stop down from 0.5 to 0.38. You would have made the money on that contract, and then you could have moved your 0.382 down here to. I'm sorry, I didn't mean the zero line. I meant this 236. Sorry. So your 382, move it down to just move it down a level, right? Each of these down a level. So if your stop was, so if you got short at 0.5, move your stop down to 0.382. If you got short at 0.382, move your stop down to 0.236. And just that way you make a little money on this one and a little bit of money on this one if this trade don't work out. But if the trade does work out, take them off at target. That's simple. All right, so that's the first. That's the first trade. Um, let's see. Let's see here. So I'm looking back at my trade of 8 here. It was actually supporting the cumulative delta line was supporting the long here. Sure was. All right. Let's get our fib extension. We broke through on the one that actually crossed. So, that's it, right? We're looking for the 3-bar move, the one to the right, one to the left. The one that it actually crossed on was the actual good one. And then I just, like I said, look left, and I find the last pivot low. And that is the last pivot low. So you just run your retracement up. Actually, that's the target one. Let me get the retracement. Either way, we'd have to run the target. Daggum. There's our low. And there's our high. All right. So we're looking to buy off the 382. We're looking to buy off the 0.5. All right. So we're long 1, long 2. Okay. Our stop's pretty far away initially. Okay. So as soon, and our stop's still down here right now. It's just hanging out. Because what I want to do is I want to see price break this level right here, this 326, and then I can start feeling comfortable moving my stops up. Okay, so I was long 1 here. Would have got long there. Actually, would have sold it right here because it busted the upper Bollinger Band right there. Yeah, so you would have sold that one before you could actually move your stop up. I mean, as you were moving your stop up, you would have sold it. Now, this one right here, however, once this got hit, you basically took this 0.5 entry and your stop and moved it up here to this 0.382. Okay, so the least amount you would have made was 4 points. That would have been the least amount that you would have made. And that's a pretty good trade, actually. So you would have got long here, and you would have sold at 565. Here's where you would have sold that one. And there again, we pulled back into it. You would have longed off 382. You would have sold it when it busted the upper Bollinger Band before you could even take your stop, move it to break even. But on this exit of this 382, you was taking your stop from 0.5 and moving it up here to 0.382. Okay. So as soon as that was hit, you were done with risk. You were making money. You just didn't know how much money you was going to make right here. You could have made target, or you could have got stopped out for 4 points, and it worked itself out. But the idea of this whole deal is just to get yourself in a position to where you can reduce risk as quick as possible. And if you have 4 or 5 of these trades, or maybe not 4 or 5 because that seems like a lot, but if you have 2 or 3 of these trades where you're getting broke even, and you just seen this thing where you were like, oh man, if I just kept my stop down here, I would have been good. Well, it don't matter. There again, think about this whole deal. If you can't be happy with $2,000, right? What makes you think you'll be happy with $5,000? You just ain't. You just You got to be happy with what you can get, but you need to be more happy with the fact that you are reducing your risk from here to here by taking that stop, because you had no idea that this thing wasn't going to come down here and whack you. You know, but all you could do was control your risk by moving your stops up here. You ain't got to be right all the time. You just got to be right some of the time, and you can make killer money. You know, don't worry about being right all the time. That's a pretty big deal. All right, and then this just we got news coming out at 9:45. We know that, so let's not play ball here. You got news coming out at 10. Let's not play ball there. We look for another setups. It kind of come through, and I like to wait about 30 minutes after news comes out before I start to play ball. Let this thing kind of settle down and get itself in some type of rhythm. Uh, we busted through. There's nothing to do there. We come back down. All right, here looks like maybe a possible opportunity. We run her up. We find a proper. There's where we cross zero. All right, the one bar to the left actually made the low. All right. Oh, you didn't get in on that one. You did not get in on that one. And here might be the thing where I was talking about that momentum trade. Let me look back at Trade of 8. Let me see what time this is first. 10:42. 10:42. All right, yeah, this is the deal, right? This is that potential momentum trade. Um, it didn't quite get back into the cloud, but this is something to be mindful of, right? Where you couldn't get yourself in a setup because of this momentum trade, but it got close to that cloud. Where you had all three indicators pegged for a sale, which realistically is why it didn't come up here and touch us. But if it would have touched the cloud, you could have got short off the cloud and just sold it down here to this lower Bollinger Band. So that's where these momentum trades come in that I was telling you about. Where maybe this fib don't set up exactly. Maybe this cloud's a little bit closer and it touches a cloud and all three indicators are pegged and you could sell off that cloud going back down. But anyhow, they wasn't nothing to do right here. No, it just didn't come up. Touch it. We busted above. One bar to the left. And here's something pretty interesting. Okay. You've got this is 11:02. You've got some pretty bad things that are going on and not in your favor. Okay. The cloud is red. All right. You've got your cumulative delta line below zero. Those are two indicators that said that, you should be looking for shorts, not longs. Well, this slow line moved above zero. And you could have took a long right here, right? Because the fib, the fib aspect told you to take a long because, we busted above zero and we punctured that upper Bollinger Band one bar to the left of the break right here. Okay. Well, that being said, you could have took this trade, but it's super risky for the fact that you do not have the cloud green and you do not have the cumulative delta line above zero. The only thing that you've got going in your favor is this little bit of momentum that's coming into the market right here. Personally, you need to leave this thing alone. Even though it looks good and it's set up good, well, this is one time that it worked. You're probably going to have 7 that it don't. You know what I mean? But just don't get fooled by this one time working out because you just got so many things going against you right here. It's just not a good idea. Not a good idea. I'd leave that alone. Um, all right, we broke below here, one bar to the left. All right, We'll mark this one up. This one is a valid trade. All right, you find your last previous high, one bar to the left and one bar to the right. So we crossed here. One bar to the right should be the low, and it is. All right, I would have got short here at 382. And I would have got short right here at 0.5. Didn't quite make it in the 0.61. All right, so it's short two contracts, right? So you've got a lot of things going on in your favor right here. A, you got the cumulative delta line. If you're looking at Tradevate, you've got it below zero. All right, you've got your 310 oscillator. It's showing that sell side momentum's coming in. Right now, you've got the cloud red. See all this confluence that's right here that's going on at this moment. Okay, all that is just should put confidence in behind you to take this trade short. Okay. So I'm gonna be short one here at 382. And I'm gonna sell it when it hits the lower Bollinger Band, and it hit it right there. Okay. And I got short the other one right there. Well, I ain't got no target set up to fix that. All right. So you got short here, 0.5. And you're looking for the target of 0.5. So 412. Where you would have got filled at? 412.5. I'll be honest with you, I would have sold that rascal right here. So let's just make it realistic. I wouldn't have held through that pullback right there. Because we busted, if you see, right, we busted below that red level. You know what I mean? And I wouldn't be trusting, I wouldn't be trusting. I would want to see what happened during this pullback. So I would have just sold down here. It's one of them deals where, don't, just because it says 13.41225 doesn't mean you need to sell at 13.41225. If it gets down there really, really close to it, just take your profit. Can't go broke paying yourself. But anyhow, this is all about trade management right here. How do I manage this trade? Well, I'll tell you how I would put a man in this trade. I should have done this before. This is perfect example, right? Perfect example of what is going to happen to you when you manage your trade tight. Okay. Yeah, theoretically, right? The trade worked out perfect. Hit there, come up here, and it hit there. Okay. Well, the idea, right, is I'm short 0.38 and I'm 0.5 short. My stop's up here. Okay. Well, as soon as this thing starts going down through here and it breaks this 0.382 or 0.236, this stop, right? This 0.382 stop, it goes down to here. Okay. So realistically, I got stopped out right there. Okay. I'm short here. Price broke that level, right? Right there. It broke that level and then come back up and stop me out. All right. Same goes for this guy. I got stopped out as well. This trade didn't play out for the tight risk management that I use, right? So if I'm short here, all right, and we break that 0.236 level, my stop goes from 0.5. My stop goes from being way up here all the way down here to the next level below me. So 0.382. So I got stopped out right there. Okay. So that trade, on one of them, I would have made from 61 to 55. Not much. And the other one, I would have made 54 to 47. That's not that pretty considering that you see what happened right here, right? You could have took profit here and you could have took profit way down here. But it's that risk management, that I personally have to do to keep myself in a good spot, right? I can't I can't watch all this and see price come down here and then come back up here and then come back. You know what I'm saying? I can't do all that. I want to make sure that I'm protected because it could have come down here and hit this red level and it could have very easily popped back up here to settlement. Very easily. You know, because you're in a range. Um, so yes, you could have been wild, you could have been an outlaw, and you would have made profit on both of them. You know what I mean? But as far as this working out over time, you're going to catch yourself getting smacked more than you're going to make more profit. I guess is what I'm trying to say. As long as you keep making these tiny break evens, more say. I mean, it's a little bit of money. It's not really a break even. I mean, you make money on both of them, but in contrast, you would have made big money, right? If you just kept your stop really wide. Well, that's a lot of time. I mean, you was in the market from 11:23 all the way down here to 11:57. That's a long time for this trade to play out. Um, so this is one of these deals where I'm going to have this type of scenario play out four, three, four times, and there will be these little bitty trades, three or four times where, you know, and in contrast, I'm gonna have three or four of these that really work out, where it's no, uh, you just immediately make profit. You know what I mean? And there's no, you're keeping yourself safe with these in case the trade goes rogue, but you've been in the game to where you can capitalize on at least three, four trades, that pay really, really well. Um, let's see here. Let's give us another example. All right, we broke zero. Ain't nothing to do right here. Again, we're pegged, right? Um, the cloud's red. Tiki line's below zero. Even though you've got indication to take a long, don't take it. You've got too much. You don't have all the confluence you need to take that trade. So there's no long to be had right there. You want to put as many things in your favor as possible again. We broke zero again. Got the 3-bar rule, one in the front, one behind. There was nothing to do right here. Let me get rid of my. Scroll on over. Might have got a little in trouble right here. Nah, you wouldn't have got in trouble because the old 3-bar rule kept you safe. Kept you safe right here. All right, so you crossed over. All right, here is the low, or here's the cross. So you're looking for 1 bar in front, 1 bar behind. Okay. Well, you're looking to somewhere to put the fib to run this fib. Well, here's where we cross the bar in front and the bar behind. All right, you could have started. You could have run your fib right here. Say the retracement. Started it up here and run it down to this one because that was the 1 bar in front. Okay. So we crossed here, 1 bar behind, 1 bar in front. And the 1 bar in front was the one that was the low. Well, the very next candle, we made another low. That just totally messes the whole trade up because, at that point, you would have had to move your fib way over here. And at that point, you're not even trading a strategy anymore. So it's always that 3-bar rule: the one behind, the one of, and the one in front of. And if one of those three ain't that low, just delete that rascal and move on. Not a good trade. Um, Here we are again. Crossed. We crossed in these 3 bars right here. None of them gave the signal. Oh, we yeah, we crossed, and none of these three bars right here gave the signal. Looks like where we crossed to the upside. So here's where we crossed. One bar to the left, one bar to the right. Well, if we tried to pull our fib up, we could have run our fib from here to there, but the very next bar would have, you know, told us that that trade's not there to take. And great for the 3 bar rule, because if you look to the right, you any pullback that you would have bought, you would have lost money on this rascal. You know what I mean? You would have got smacked. So that 3 bar rule saves you once again. Um, and here's a crossover, another crossover. 1 bar to the left front. Nothing to do here either. Um, here's where we crossed. 1 bar to the left, 1 bar to the right. I mean, you could take this trade, but there again, what we're looking at here, right? We know that the cumulative delta line is below zero. The cloud is red. You've got several things working against you. Even though this trade worked out, it didn't work out completely, though. I don't think. Let's mark it up and see. All right, so you could have got long. Oh man, I flipped my whole thing. All right, so we got long right here off the 3.2. Could have got long off the 0.5. Yeah, so you've been long too. Um, extension. So you could have got long one right here. Okay, and there again, you're looking for this, point 236 to be broken before you can move that stop up to break even. Well, you moved your stop up to break even, and you immediately hit. I mean, you couldn't even move your stop to break even before you hit target on that one. And would have got long here as well. Um, and there again, your stop would have been moved to here. As soon as that 0.32 got broken, and it never retraced back into it to stop you out. But you were up here at 460, and you never would have got filled on that last contract. So let's run it over here, and let's just be realistic and say that you kept it, and you would have got stopped out right there. Um, you know, and there's several ways that you can manage this trade, right? There's nothing that says that you need to keep that stop right here. At this point, 236, especially when we come up here and we busted the upper Bollinger Band, right, and we made a lower high, right. Here's a low. You made a lower high right here, and price continued to run. Well, if your stop was down here, there's nothing that says you can't move that stop and put it right below this lower high. So rather than took out there, you could have probably got taken out, somewhere right here. Been a little extra, from 37 up to 43. Just been a little bit more. Just something to be mindful of how you can move your stop up, you know, to protect you. Because, at the end of the day, I mean, you ain't never going to go broke taking a profit. So you can just, you know, keep that in mind, the way that you would manage a trade. But the biggest part is, there again, on these fib deals, you want to move that stop to break even, or, say for instance, you got long off the 0.5, you want to move that as soon as it breaks that price breaks that 0.236 level, you want to move that stop up one level. So, if you were long, obviously the 382, you want to move it up out of the 236. You know, that's that's the name of the game. And I would honestly, for my personal mental health, and the amount of stuff that you go through in watching these trades play out. It serves me better to know that let's go back over here where it actually happened that I made this amount of profit over and over and over rather than take that big loss. You know what I mean? Um, it does me good knowing that I can protect myself by doing that. It's just one of them deals where you never, ever will have an offense strong enough to cover your tail in situations where you take big losses over and over and over. You've got to have a defense that is twice as good as your offense in order for you to have long-term success in this stuff. You know what I mean? You you just got to. It's trading the way that I trade. You have to because expect a bunch of these scenarios to play out. And then expect maybe 3, 4, 5 of those good trades to play out. But you know what? At the end of the day, when you're sitting there counting all your chips, you've got money you've made, you've got money you made, you've got a bunch of these little scenarios where you've got money that you made because you managed your trade so tightly and you let it run when price allowed it to run, and hit major targets. So you had 3 or 4 really awesome trades and 3 or 4 little tiny trades. But at the end of the day, I would rather have that scenario than have 3 or 4 big losses and 3 or 4 big winners. You know what I mean? So I just put myself in that spot over and over and over again, and it just works itself out in time. You just got to participate. That's all. You got to participate. Uh, and another thing, if you guys find yourself in a position where you're taking um, a loss after a loss after a loss, and you, there's a good reason for it. You most likely are in a market condition that is designed for that. So rather than you sit there and try to fight it and participate, if set you guys a number up, just a number. It needs to fit your trading plan. So if you find yourself trading um, 4 trades that are all losers in a row, just bam, 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 sit the day out. There's no need in it. If you're going by strategy, I should say that if you're going by a strategy, and your strategy, or per se this strategy for sure, if you've got 4 losses in a row, something's wrong. You got to back up. You got to repunt. Maybe today's just not the day. We all have them. Just sit out. And try to limit yourself, guys, to let's just count this thing up. We just went through the whole day of trading. 1, 2, 3, 4, 5. 5 trades Friday. Um, trading the fibs. There's 5 trades. I think you probably could have gotten some of these momentum trades as well. And that's the idea, right? Where you can't get in some of these trades, maybe you could get in these little momentum trades, right? So let's just mark this rascal up right here. All right. Well, you could have. Well, we know the Tiki line, the cumulative delta line's below 0. It's pegged. This is pegged. The cloud's red. Take a trade right here. Short here. Sell here. That's 6 trades. Here's another one. There's 7. You backed up into the cloud. Take your trade right here. Sell it down to the Bollinger Band. That's 7 trades. All right. So you see what I'm saying? Throughout the day, if you're realistically trading, you're not going to have a ton of trades. You know what I mean? You just ain't, because there's just not that many opportunities. If you're watching out for news and you're trading actual setups within levels, being mindful of where you are in this range and where you are outside of this range, you realistically don't have that many opportunities. You've got to just capitalize on what you have. You got 1, 2, 3, 4, 5, 6, 7. 7 trades on the NQ. I didn't have 7 trades Friday. I mean, of course, I stopped a little early, but I'm just saying, set you a number. Say I'm not going to trade more than 10, because you might have 10 or 12 one day, and you might have 7 the next. Just set you a number. Say I'm not going to trade more than 11 trades a day. What that's going to allow you to do is you're going to say, if I only got 11 trades to take, you ain't going to take a trade that is half-assed. You know what I mean? You're going to take a trade that has a great setup, your ideal setup, you know, um, and you're just going to look for that trade because you only have X amount of trades throughout the day. So you're only looking for really quality setups, and you just trade them quality setups over and over and over again. And that's quality. That's quality. That's quality. You know, yeah, you didn't come walking out like a rock star, but that was a quality trade. You stuck to your rules. You implemented risk management, um, and you lived to find another day. You know, um, and it's put as many things in your favor as possible. The confluence part that I was telling you about. This zero line crossing. The cumulative delta line, is it below zero or above? Put as many of these things, this cloud, this flow line, and the cumulative delta line, all in your favor. And if you can put all those in your favor and be mindful of where you are inside that range or moving away from that range, you have an extremely high probability profitable trade. It's all about that confluence. It's all about putting as many things in your favor as possible. And all along, keeping a tight risk management, right? That's it. Just keep your risk minimal. And it just allows you to stay in the game a whole hell of a lot longer. And at the end of the day, you don't have these days where you get done trading and you're like, Jesus, I was down, you know, whatever, just say $1,000, and you crawled your way back up and your profit is $200. Well, really, what did you do? You know what I mean? You kicked your own ass is what you did. Um, so you just got to be mindful of all that stuff. It's not completely necessary. Keep these stocks super tight. Keep your risk in check. And if you get stopped out for a small profit 10 times in a row, that's better than taking one big loss. You know what I mean? That's the way I approach it. And I try to, there again, you put as much confluence in your favor as possible. There via the cloud being red, this moving below zero, the cumulative delta line 0, and a short setup. That is a ton of stuff in my favor that a trade should work itself out. And that just puts me in a better spot. And I can feel more comfortable out using these tight stops. It's all about location. It's all about putting all that stuff in your favor. That's it. Well, guys, I'm gonna let y'all chime in here, man. I have talked for a minute. I don't know if I left some, need to back up a little bit. I don't know. Y'all got any questions on some of this stuff?
Yeah, so for the MACD and the delta lines, are the settings on those just the default ones on your TradeAway?
Let me get you switched back over here to TradeAway, or let me get switched back over to TradeAway. You see my TradeAway now?
Yes.
Okay. Yeah. So my my MACD lines. This is the thing, right? You've got simple and you've got exponential. The 310 oscillators, it's made off the simple, not the exponential. So make sure you change that to simple. Um, and it's just 3, 10, and 16. And I disabled the histogram. So that the way this is set up is exactly the way that the 310 oscillator is set up. You're gonna have the
Yeah.
exact same stuff, just cleaner. I don't
Yeah.
like that histogram personally.
Thank you, sir.
No problem. No problem. And then, like I said, I don't even know if you do anything to this cumulative delta. No, I just whatever it is, whatever I put on here, it works super good. It's part of another strategy that I had kind of implemented for the girlfriend strategy. This thing gives a lot of clean stuff in terms of direction and momentum, like what side of the market you should be looking to take trades on. It kept her out of a ton of trouble. Just being below zero or above zero. That's the only thing I use it for. I don't use it for any other thing. No type of divergence of no degree. It's just we above it or we below it. Super clean signals.
Quick
Um,
question on that, and for anyone else actually. I'm on NinjaTrader. I don't have access to a cumulative delta without paying money. Anyone got like a next best alternative?
mm, I don't. There's not even a cumulative delta offered on TradingView. Not that I'm aware of.
Like my kind of current plan B is just a 200 EMA as a kind of long-term trend signifier.
Yeah.
But all right, cool.
Oh,
Quick question. One more quick question. Firstly, thank you so much for doing this on your Sunday afternoon. Really appreciate it. I know I've seen you in today's stream. You've used TradingView for your pivot extensions. Do you know if it's possible to do that in Tradeovate? Like I couldn't find it.
it ain't. I tell you what I'll do. I'll show you what I've got going on right here. Let me find out where there was a setup at. This ain't an ideal setup, but I'll use it for you. My drawing tools. I switched some of my stuff around. Um, so we broke through right here. I think I gave that example a minute ago. Yeah, that's kind of the way I did it. So your point
Oh,
six.
right.
So your point six. Your 61.8 is actually your point. Your 382 is what that is.
Yeah.
Your 50 is still the 50, and your 38.2 is your 61.8. You see, if you could swap those two, those would be the same for each other. Okay,
Yeah.
and these are my targets that I used up there. But there again, I'm swapping back and forth from TradingView, so I'm able to have those numbers ahead of time, that I'm using. But I
Yeah.
don't know.
Cool. Thanks. Hopefully, I've seen there's like some requests for it. So hopefully, at some point, if enough people shout, might
Yeah.
might.
Like I can't even I'm trading on the phone most of the time. I can't even draw my lines on Tradeovate because it they don't stay, and you touch the phone and it does it shows up as this
Yeah.
stuff. It's like, bless it. Only thing I do here is simply execute. Now if I was at home, it's a little different story. I can see this stuff, right? Um, like I'll show you how to set these lines on Tradeovate with this cloud. So we've seen this red to green, this uh, green to red move, right? And we made a green to red move, and this bar just busted through it. So the level is actually right here, right in the middle of that dot. So if you were setting a line, if you went a horizontal line right here, Ah, dang, I can't get it straightened out here. I think that's where it is. Oh, man, I can't get this thing to stand still. I hate this thing. There you go. So there you go. That's how you do it on Trade Debate with a cloud. There's your untested level. But one of the things I don't like about Trade of 8 is like it's how do you it don't show a price over here on the side, that's kind of I don't like that part, you know. Whereas Trading View, you have labels, you have price labels that you can use. So anyhow, so price comes up here and hits that level, um, go ahead and just simply delete it. But I would be looking to go short off that level. There's no doubt about it. If it goes up here
Cool,
and touches.
thank you.
Yep.
Appreciate it.
Well, has anybody got any more questions? I know I went over a lot of different things there, so I just wanted to make sure that we were good to go for Monday. I mean, there was a little bit of change. There wasn't a ton of change. A lot of risk management stuff we went over, and some of these intermediate, things that as far as these pullbacks go, where if you're pegged, you got red clouds and you've got the zero stuff, and you can take these Bollinger Band breaks and trade them back down, or you've got these, you know, where you didn't have a fib set up. As long as we're pegged, with all three, you can feel confident taking a trade into that cloud, short back down to the lower Bollinger Band. So it's just kind of some add-on trades that you get to experience throughout the day.
Hey, quick thing for you, Magnum.
Yeah.
I've been doing the strategy, and I've been doing it to reduce risk. So instead of taking at the first level, my first level is 50. So that's where I'll set one contract, and then I'll set another one up above it. The other thing I do is basically in the plan that I have, two to one pretty much. So, or 1 to 2 pretty much. So I basically boil it down to 10 points to 20 points. Every trade I need to get, I'm risking 10 points on one contract and gain of 20 points, so, 200 to 400 pretty much. And I just get really, because of the drawdown that I have, that's where I take it at the 50. But on trades that it doesn't retrace to 50, I miss out on that entire trade.
Yep. Do you feel like maybe some of them add-ons could help you recover some of that missed opportunity?
Absolutely, yeah. I've been doing other things too. I'm trying to use your main strategy and try to figure out if this trade doesn't work out, what's a way that can keep me out of it, so on and so forth. I've been doing work with the super trend as well, with a cloud. It's definitely, it hurts my eyes a bit, but I'm picking up a little bit here and there with it. But the second strategy, not the fib strategy, I like that one. I'll have to, I'll try to implement that. I did have a question on that one. When it breaks that top Bollinger Band, and both your lines are below the zero line, where do you put your stop at?
Above the candle. So it's either going to be a real tight stop, and it's going to work you up, or it's going to be a loser. I mean, there's really no moving it. I'm either going to win or I'm going to lose.
That's it. Yeah. To me personally, I like that. That's an all or nothing. I mean, if you lose, you're losing, 2 or 3 points, maybe 5 at most.
At best, yeah. Super. That was the add-on part, right? I mean, it was that fib. I mean, that Bollinger Band break, and it was also the levels. You know what I mean? The levels it's either literally dead nuts on, you're going to make money, or you've lost money. There's no, a couple point stop, and you either made a couple grand or you lost a couple $100. You know what I mean? beautiful stuff. You know.
Now, with your levels, I mean, because I'm doing everything on Trade of Eight. How are you you're getting everything from Trade of View on your volume wise to put your levels at?
No, so everything that these levels are coming from the cloud themselves on the 5 minute chart. You know, from that red to green move. Um, and you know, you're not doing those levels based off anything but the 5 minute. So like Friday, for instance, you only had one opportunity. So perfect example right here. I took this long right here on the NQ. You see, we had a red to green move, right? And here was the level, right? It went in as soon as I seen that. So I was waiting, and I had an order sitting there. As soon as it come down there and touched it, because of that level that I put in right there with that red to green move, you see the drawdown I had. It was nothing. And you see you know what I mean? That was a winner chicken dinner all day long, you know? And so those levels, once they're hit, obviously they're deleted. But like here's the other one. It's just sitting here waiting to be hit. You know, be the winner or whether a loser, either or. But you don't have to put much risk on because the stops can be so tight. You know.
Yeah, so you're just doing it off the 5 minute. Have you tried it on the 1 minute?
I have, and it's very unreliable.
Okay.
Yeah, it's the 5 minute is the way to go. So I'm not trading off the 5 minute at all. The only thing that I'm doing on the 5 minute chart is I'm setting these dynamic levels from these red to green moves, and I'm simply watching them on the 1 minute chart to execute. So, you know, there again, you know, if you look on this 5 minute, you don't have as many of these red to green moves as you do on the 1 minute. You know, the 1 minute it's just, you know, it's crazy. You know, I mean, look how many levels you would have. I mean, it works out sometimes, but it is unreliable. You know, like there. You know, it's tough on this 1 minute to get good, clean signals. But if you're putting your levels in on a 5 minute and executing off a 1 minute, you're doing yourself a favor for sure.
Cool. I appreciate it.
Yeah, absolutely, man. Absolutely. Well, guys, if y'all got anything else, man, we'll get it hashed out here.
Thanks so much for your time, Magnum.
Hey, no problem. No problem. Well, guys, I'm gonna cut this thing loose. If you guys are done, I am done, and we'll get after this thing come Monday. But hey, before everybody does cut out of here, this every bit of what I just explained to everybody, you know, I have the most amount of luck during regular trading hours. I have very little to no luck during Globex. So just a heads up, if you guys trade Globex, the results are a little bit inconsistent. So this strategy is fully designed and made for regular trading hours where there's volume that comes into the market. Now, if for some reason we have news or we have you know, some kind of overnight event where volume comes in and a lot of people want to participate, you know, I would look to roll some of this out during the Globex. But until then, it's designed and made for regular trading hours where volume is attached to this stuff. So just a heads up and kind of hopefully keep you guys a little safer. Well, guys, if y'all are good, I'm gonna cut this thing loose, man. We'll get back after this Monday.
Awesome.
Sounds
Thanks, man.
good. Thank you, sir.
All right, thank you. See you guys.